The Denver Boulder area registered annual rent growth for apartments that was below the U.S. norm in Q3. It's the first time in this economic cycle that Denver has been an underperformer. We'll take a look at Denver's diminishing pricing power in this edition of Apartment Market Dynamics from MPF Research. Thanks for joining us. I'm Greg Willett.
And I'm Chelsea LaHue.
Chelsea, we don't want to make it sound like Denver has gone off the edge of the cliff. There's been some strong demand for apartments this year. Occupancy is still in really good shape. The rents are going up, but that rent growth pace is way off from earlier levels.
Year-over-year effective rent growth for new leases registered at 3.1% as of third quarter. While that would be a decent performance in lots of places, Denver's average annual rent hike in this cycle is more than double that. The pace of growth annually got to around 10% for a while.
Chelsea, there's lots of construction going on in Denver. I mean, is this just really a case of all that new supply slowing momentum?
Accelerating completions certainly have played a role in the more modest rent growth performance seen for top-of-the-market developments in Denver of late. Class A rent growth is coming in at 2.5%, but it's not just the top-tier product where rent growth has cooled. The annual rent growth numbers are 3.1% in Class B projects and 3.8% in Class C communities. Furthermore, on the neighborhood level, there's not much relationship between how much new supply is coming online and how much the rent growth pace has slowed.
Let's talk about some of the positives we're seeing in Denver right now. After employment growth briefly lost steam in 2015, additions are up again this year. We're back to an expansion volume running near 50,000 jobs. That economic growth is helping sustain impressive apartment demand. We've now had 2 quarters in a row of absorption way surpassing completions, so occupancy has ticked up about 100 basis points from the level seen early in the year. It's now at a very solid reading of 95.9%.
Denver is going to have to continue to deal with lots of new supply in the near term. Ongoing construction totals 19,662 units, translating to 6.5% inventory growth. The addition of about 5,500 units in the urban core will push inventory growth pace to a stunning 30% in the downtown Highlands Lincoln Park submarket. Inventory growth in the range of 11% to 15% is on the way in Broomfield, Northeast Denver, and Highlands Ranch.
Our expectation is all the product and initial lease-up across Denver will cool occupancy slightly, but the resulting rate stays healthy, above 95%. We're forecasting annual rent growth near the 3% mark for a couple of years. That's simply a return to a more sustainable level in line with the long-term norm after unusually aggressive results were seen in 2011 through 2015. Thanks for joining us for our Denver multifamily market update. I'm Greg Willett. She's Chelsea LaHue. This has been Apartment Market Dynamics from MPF Research.
Want more? Go deeper with MPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.